So guys, welcome back to the channel. And of course, we're getting ready to talk about some money. Very important. I have not been uploading much lately. Life has been a little hectic, but I promise I'm going to get back on my consistent uploading schedule of at least a few times a week. In this video, guys, I want to talk about why purchasing real estate is not an automatic win. It's not a flex. And people need to understand that is whether you're buying real estate to live in as a primary residence, or if you're buying real estate for investment purposes. I'm gonna break down why very quickly. On the investment side, there's three elements that make real estate a good investment. And when I say real estate as an investment, I'm talking about from like a rental standpoint. So if you're buying real estate to rent out to individuals to live in, there's three elements that make it a sound investment. Number one, you need to have monthly cash flow. So you have to buy it at a price that allows you to have real monthly cash flow that can have a positive impact on your life. So if you go out and buy a 10-unit building and you take on all of the responsibility that it's going to take to manage a 10-unit building, or pay a management company to manage that 10-unit building, and you're making like $500 a month positive cash flow, you wasted your time and you did not win. Okay, so the first thing is you got to have reasonable monthly cash flow. The second thing is it should have solid tax benefits. Now, most real estate purchases do have great tax benefits. So you usually, in most cases, guaranteed or close to being guaranteed positive results there, because you get to write off various expenses, taxes, mortgage interest, all types of stuff. I'm not a tax attorney, but consult your tax attorney on it before you buy, so you'll know all of the deductions you'll be able to take. The third thing is you want to be able to leave at the end of your time of holding that real estate with a large gain financially. So if you purchased it $500,000 and you were only able to sell it at, say, $575,000 like 8 years later, once you've paid all the fees associated with closing that transaction, you're not going to make much money. So, which means you paid too much in the first place, or maybe the area that you bought into, things didn't accelerate as quickly from an appreciation standpoint. But you got to do your homework. Okay, you got to do your homework. You cannot totally depend on your realtor. You cannot totally depend on the guru that you saw on YouTube or Instagram or TikTok. You got to actually put your nose in there and get dirty and figure out what is the best move to make sure that you get those three things: great monthly cash flow, tax benefits, and a big bag of money when you resell. The second thing I'm going to talk about is buying personal residence property or principal residence property. Okay, what I'm seeing in the last couple of years with the way the market has been so crazy, lots of realtors, they put out, they make these Instagram posts and say how they buyers are winning by buying at the top, by buying above asking price, by waiving all contingencies as far as things like appraisal contingencies, things like inspection contingencies, even things like occupancy contingencies. People are purchasing properties and allowing the owners time, weeks, sometimes months, to get out of the property that they bought, and they're carrying those costs as soon as they close. Example, one person bought a property, the owner needed 3 months to find somewhere else to go, and they allowed them 3 months to live in that property free. So they're paying a mortgage for 3 months for a property they're not even living in, and they went above asking price to buy it. I'm sorry, that's not a win. And somebody needs to tell you this. You need to do your research. Buying low and selling high has always been the landmark principle of real estate. So if you are purchasing and you're going for that super hot neighborhood, it might not be the best idea for you to buy there. You may be able to maximize your gain and still have the quality of life that you want by buying in that adjacent community that the development is headed towards, and being able to get it at a much more reasonable price where you leave equity. That's the key, equity. So you can be able to purchase the property and eventually sell the property. That is the key at a big gain. Okay, so those are the things, guys. Buying real estate is not necessarily a win. It is definitely not an automatic flex just because you purchased real estate. It means absolutely nothing. So I just wanted to make this quick video to point those things out, because I'm a realtor myself. I've lost deals because I've advised people that, hey, this is a horrible big deal for you to buy in your position for what you want to do. It's like, but you're not going to get that honesty everywhere. So it's going to be up to you to do your homework to make sure that when you buy real estate, it is a win. That's all I got on this one, guys. Make sure support the channel with a subscribe, like, share, pop that notification bell so you know when something new is dropping. YouTube thinks that this video is the next one that you should watch, so make sure you obey YouTube and watch that next video. Till I come back with my next video, though, I'm 100% gone.